So looking at real estate, farmland in the last 30 years has returned 10+% net. So it's done really well. It's done it with way less volatility at about 7%. So on a Sharpe ratio, which is returns divided by volatility roughly, it's done better than S&P. It's done better than real estate as well.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today we're joined by Artem Milinchuk, founder of FarmTogether and a seasoned finance leader with over 14 years of experience across food, agriculture, and farmland investing. Through FarmTogether, he's built a platform that gives investors access to institutional quality farmland investments, bringing a traditionally hard to access asset class into modern scalable investment model. Welcome to the show, Artem.
Thank you, Dylan.
Now, when we talk about the farmland space, this is, of course, an alternative asset class. How did you get into this space?
So I started the company in 2017. Before that, for about 10 years, I was working in Canada in financial institutions, investment funds, and a lot of my focus was on natural resources. And I actually invested a little bit in farmland, which was even more niche back then. And it kind of blew my mind that even in these large organizations, no one heard about farmland, no one was looking at it. But when you look at the sort of the large capital markets, it's very much about doing the right asset allocation and thinking long term versus trying to chase the latest stock. Like when you have a lot of capital, you're not really thinking, oh man, I should like buy Bitcoin today and then tomorrow I'm going to buy Tesla, something else. And farmland is a huge vital asset class. And so it kind of was obvious to me that just as we have seen in the last 10 years with a lot of other asset classes becoming more mainstream, farmland would be that as well. And so that's sort of a bit of history there.
How does farmland compare to traditional real estate from a returns and risk standpoint?
Yeah. So one is, I'm glad that you said, how does it compare to real estate? Because while it is its own asset class, I think real estate is a great lens through which to look at farmland. So it's also a real asset. It's built on land, it is land. And a lot of the income comes from leases, although that's where the comparison will break a little bit. So looking at real estate, farmland in the last 30 years has returned 10+% net. So it's done really well. It's done it with way less volatility at about 7%. So on a Sharpe ratio, which is returns divided by volatility roughly, it's done better than S&P. It's done better than real estate as well. Real estate has higher volatility. It also depends what kind of real estate. For example, commercial real estate has had a lot of trouble last few years after the pandemic. Farmland actually has done really well. So there is, some similarities, but also some key differences.
That goes counter to the narrative that farmers are struggling.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
There is a pervasive and long-running narrative that farmers are struggling. Overall, they're not. So there's, of course, challenges, and certainly depends where you are. But if that was the case, we wouldn't have food, and it would be the national crisis every year. When you look at, the returns of farmland I just mentioned, but also at the USDA farmland net income, it's very high and it's consistently done quite well. Sometimes you'll see headlines like 300 bankruptcies or bankruptcies are skyrocketing. If you like 300 bankruptcies over 2 million farmers is 0.00. It's like a negligible. It's like a blimp. So in reality, farming overall can be profitable, but of course you have to be smart about it.
Who is the typical investor in farmland today, and what's the scale of their investment?
So a typical investor is a high net worth individual. So right now we only open to accredited investors. There's no unique or one profile. It's people all over the place. Typically people that are a bit older, they've seen through cycles. They don't like chasing hype. They're looking for stable long-term returns. They plan 10 plus years. So it's people who are investing for their retirement, or people that want to invest and forget. So we have doctors, we have lawyers, we have dentists, we have business owners, we have farmers, we have finance people. So it's really all over the place.
Now, what makes a farmland deal a good deal? And then, of course, the underwriting process is going to be different than if you're underwriting a multifamily investment property. What's the underwriting process look?
Yeah, certainly. So same as in real estate, location is key and price that you buy it at. In case of farmland, location means good water, because we invest a lot in places like California and then also Oregon, Washington. Good soil, proximity to the right infrastructure, ports, logistics, labor, equipment, fertilizer, things like that. And then same as in real estate, the price you buy it at. So our returns are twofold. So you have the price appreciation. Farmland in the last 50 years has appreciated by 5.9% a year. It's very nice. And then you have the rent or the income component. So like in real estate, if you rent out the land, then the farmer pays a lease. But unlike in real estate, you can also run the farm direct operated. We're essentially running a whole farming business. And that's where we excel at FarmTogether, by the way. So then you're receiving the profit from the farm.
Now, when we talk about scaling a business, what's the hardest part of scaling a agricultural business from scratch?
So for us, we are an asset manager. So we don't have to scale the agricultural business, thankfully. What we do is we rely on trusted partners that will farm the farms for us. And oftentimes, to your question, there's some multi-generational businesses. So all the farms we work with, these are most often families. Sometimes, you hear amazing stories, people that have done it for a century. So
Yeah.
yeah.
One of the interesting, segues to real estate here is, as these cities are expanding, farmland is becoming less and less, but that also makes the farmland more valuable, right? And so I experienced this living outside of Dallas, Texas. I was living in a town called Denton, and there was certainly a lot of, farmland out there, but then it was also being encroached upon by kind of the urban sprawl. And I'm sure that's happening pretty much everywhere.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
It is, yeah. So millions of acres of farmland have been lost in the last 10, 15 years, and that trend continues. So the farmland that we have, some of it is close to urban centers, and one of the potential exits for investors, maybe a sale to the city or to a developer. There's also development around solar and wind. So thankfully, though, United States is blessed with farmland. We have almost 900 million acres. So again, that number is decreasing. And then a lot of that farmland is used for ethanol production. So as you can imagine, as we continue to electrification of our fleet, a lot of that farmland can be repurposed to grow foods. I think, there is certainly trends happening around urbanization, but we're good.
Are there any global trends that you're seeing in the agricultural space and farmland that investors aren't aware of or paying attention to?
Yeah, so there's nothing of that caliber. I think everyone kind of gets farmland intuitively. You buy land, you grow food, you sell food, and we've been eating every day. So that's what makes this asset class uh, excitingly boring. You you don't need to worry about, today you have this SaaS company, tomorrow AI has destroyed it. Like, this is not, food is
People
not
need
going
food.
away.
AI can't, take over.
Yeah, you can't vibe code an acre of productive
And
farmland.
that's right. I know you have extensive experience in the financial world. How did your experience at Ontario's Teachers Pensions Plan help you think about and shape your thoughts on investing in farmland?
Yeah, certainly. And so for those who don't know, OTPP, as it's known, is one of the oldest, largest, and most successful investment organizations, period. Done tremendously well for the Ontario teachers. And it's a global direct investing multi-asset organization. So I think I just had front row seat to extremely talented and thoughtful investors. So everything from how to use technology to be a good investor to how to think right, how to think strategically and long term. All of that I bring to FarmTogether. And it's also understanding how to take a farmland, and present it in a way that's clear to the investors, right? Because investors, we have a lot of people who do actually care deeply about feeding the planet, sustainability, but they also want their returns. And so you have to explain it, same as in real estate. This is what the returns are. This is what the risk is. This is how it's different, similar to real estate and other investments you may have in the portfolio. So all of that, thankfully, I was able to learn at
One
OTPP.
of the more challenging things that I've seen about purchasing land in general is that it can sometimes be difficult to secure financing for land deals of all varieties. When farmers themselves are looking at purchasing farmland, are they typically, paying a huge portion of it in cash? Do they have financing? Are there specific partnerships that they'll have with banks to where they may kind of have a one-off or very unique relationship with their lender?
Yeah. So typically, when you buy farmland, you get a mortgage. So in our case, it's a farm credit system, which is a government organization that supports the farmers. So it's kind of like Pharma Mac and Freddie Mac. We have similar structures in farmland. The LTV you get, loan to value, is like 50 to maybe 60, 70% tops. So the rest is,
Cash. Yeah.
yeah, the rest you get cash. So that's why farmers work with us, because oftentimes we follow the farmer. We're very farmer centric. They will tell us, "Hey, I want to buy this land, but I can't afford the whole thing. Can you do sale or lease back? Oh, can we buy it, but then I buy it back from you in 10 years?" And so there's a lot of that that we actually do. So that's a good question.
Are there any common mistakes that you see folks making when they're investing in the farmland space, or is it somewhat of a, uh, you know, operator-driven model? And as long as you're successful, uh, working the land, that you'll be successful in the agricultural space.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
No, it's a difficult sector, and we definitely took some hits early on learning, but I think we're much smarter now. The again, price is really important in water, understanding water allocation. having the right operating partner is critical, absolutely. And then it is still a hands-on business, so you need to be able to continue monitoring it. So I think the biggest mistake I see, look, the farmers, they're incredibly capable, they're smart, they've been doing it for generations. So that's why, again, I say we're farmer following and we want to partner with the right farmers. It's people that have this romantic notions of farming. Oftentimes people in tech call us and be like, I had an exit, I want to buy a farm, I'll have chickens and I'll have goats and this and that, and I'm going to live
But
on the
no
farm.
experience. Yeah.
It's just a lot of work and you need scale. You are, you're competing globally. You're competing with very smart, creative people. You're competing with people constantly introducing new technologies, new varieties, new genetics. And so, yes, I think a mistake is just thinking that you're kind of gonna, buy a farm and coast. It's a active business.
Do you think it's at all likely that we will start to see smaller farms on some level, whether that's for people who, like you mentioned, may have a tech exit and they want to
Hmm.
do something closer to home and maybe not,
Hmm.
thousands of acres? Or is it just at that point the deal economics don't make sense on any level, and you're either it's kind of go big or go home?
It's go big and go home. Yeah, uh, it's a commodities business, right? And so unless you have some sort of agreements with nearby stores, or it's a small farm, or it's like highly organic, regenerative, which is some of what we have. Um, yeah, it's hard. You have to, and the thing you're competing with countries like Brazil, you're competing
Right.
with places like Mexico, right, where labor is cheaper, land is cheaper. Competing with places like Russia that grow wheat, where a lot of them, they don't have the history that we have in the United States, like the Homestead Act and just a lot of people moving west. I was reading this biography of Lyndon Johnson randomly. It's like Texas, right? And how you get these pieces of land. But the reason is now our land is highly fragmented, whereas other places, like Russia, Brazil, it's huge, huge pieces of land that were made like that from the beginning or for many, many years. So yeah, unfortunately, um, yeah, as much as I appreciate the local farmers market and being able to kind of have a vibrant farming ecosystem. The realities of the market are that it's go big or go home.
Now, when you're competing with other, you know, international farmers, right? Um, there's of course, and I think we take this all for granted when we're buying food at the grocery store, but there's also transport and logistics that goes into getting food from Brazil, right, to your local grocery store.
Hmm.
uh, when people are taking that into account, I'm imagining that a big part of it as well is that the expenses, the cost to produce those goods in a place like Brazil is going to be substantially less than places in the U.S. as well. So,
Yeah,
is there an
it's
element
true.
of that as well?
Yeah, so Dylan, absolutely. So really good point. So it's true. For some commodities like citruses or apples or cherries that are perishable or that have growing seasons, um, that you have to account for, yeah, the time of storage or cold supply chain. I mean, that's why US is still dominating in California as an ag producer, is the sixth largest country in the world. So think about that. So
Yeah,
yes, absolutely. But at the same time, so one, for cash grains or cash crops like corn, soybean, you're talking about like massive scale, right? That you're transporting globally on ships that can be stored. So here you're competing not against bringing something to US, but with also a lot of our agriculture goods are exported. So you
I
have that
gotcha.
problem. Yeah, that's what.
We are coming up on time here, Artem. Any new projects that you're working on? And then as well, what's the best way for folks to reach out to your team?
Yeah, absolutely. So no new public projects at the moment, although always something under the hood. Um, just yet to give a quick recap. Basically, our website is farmtogether.com. You can invest with us with as low as 15,000. Target net returns are 8 to 11%. It's all done online very simply. And our contact information, emails, phones are all on farmtogether.com. So yeah, thank you so much for having me.
Thank you, Artem.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.